we started yesterday, and we all know that it's all built around CRT, right? So, hold on. So, CRT, right? That's what you all are obsessed with. At the beginning, I actually had plans to actually teach you guys raw way of trading, but many of you are just DMing me about CRT, CRT that, CRT this, CRT that, looking for some kind of holy grail. I don't know, but then to some extent, I just had to succumb to you people's need, and yeah, it's simplified. The way I teach it is actually simplified, but then there's more to trading than just CRT. CRT without a proper logic is just gambling, or let me say it's just pattern trading. Let me put it that way. It has to have a proper logic. You understand? So from yesterday's class, I let you guys understand that I can remember telling you guys about using the Monday range for DXY, right? And you could see it's literally exactly the way we said it, right? And the logic here is because we are bullish on the weekly time frame. We are aiming for this buy side liquidity. And yeah, who's that?
Before you go further, I just wanted to find out, you were saying that
Did someone interrupt me?
the people who are
Okay.
bothering you,
And we are aiming for higher prices, right? So the logic here is this: we want to dig into this fair value gap. So the logic is we're using a fair value gap, a key level. Like I say, your CRT should be happening inside a higher time frame key level if you want it to be high probability. Please, I don't want to have network issues tonight. Please. I was meant to hold this class yesterday. Damn. Oh, hold on, guys. Just hold on a minute. Can you guys hear me properly? Can you hear me properly? Am I rugging?
Loud and clear.
Okay. Sorry. So that means I'm just having chat issues. Okay. So we had a proper logic about it, right? So I've told you guys you want to keep it inside a key level. That's one thing that makes it high probability. Do you understand? So now, first thing first, a fair value gap. That's the first thing. A fair value gap, right? We closed above these candles. This is an order block right there. You take the opening of that candle, and this whole trade down candles, they are order block right there. This 1, 2, 3, they are order block. The moment we close above it this way, they become an order block. So we anticipate the price to come down to this level and probably give us a close. And I told you guys about the closing of price above the fair value gap and above a range and what it means. So now, if you are blind traders, they're going to start trading this as, their model 1 entry and say, okay, this is an order block. We're reacting off order block. And you're going to see them posting shots tomorrow on DXY and bullish on Euro USD, right? But I'm teaching you guys not to do it that way. Why? Because you want to read meaning into what you are actually doing. And by reading meaning into what you're doing, you are neglecting what the crowd is doing. Why? Because you want to approach price with some sense of, confidence and knowing what you're looking for and the possible invalidation for that. And looking at price. I hope I'm clear. I hope I'm clear. My voice is clear, right? Am I clear?
Your last
I just feel like,
sentence wasn't clear.
okay. So I said a lot of novice are going to take this as an order block and say tomorrow we are bearish. Why? Because we reacted off this order block right here. And I'm trying to tell you guys that when we are bullish, we anticipate bearish order blocks to fail and bearish PDRAs. And when we are bearish, we anticipate bullish order blocks and PDRAs to fail. So you have to analyze with the proper context. Now, when the majority are going to be selling tomorrow, because you are informed, you're looking for buys. Now, does this mean you can't be wrong? Nope. But this is actually the right way to read it. Why? Because the higher time frame, the weekly and the monthly, literally tells you that price is going for this buy side liquidity. Look at how clean it is. Equal highs right there. It's very, very clean. So when you look at the chart, who is comfortable? Definitely the person that sold as this double top is very, very comfortable. That's the person who is comfortable. Why? Because when we close with this big candle right here, that's an engulfing candle. And that's the sense of, oh, the sellers are taking over. But now I'm informing you to be ahead of the game. And the blind ICT trader is going to take this as an order block, as a sell. Nope, you don't do that. Why? If you are reading price, you're reading it critically. Look at this low right here, this candle low right here that created that order block. So, and a high probability order block is the one that takes out liquidity and, leaves a fair value gap. That's a high probability order block. Now, we took out our low. We closed back into the range, never closed beneath it. We engulfed, left a fair value gap. This is our order block right here. And we are bullish. So that validates the order block. Now you look at the high of that candle. You notice that we closed above it. That's the real break of market structure right there. And this retracement right here is the real OTE. I hope this is making sense, right? This is how you read with proper logic. Now, when you take your candle from this low to this high right here, and you put your OTE levels, you notice that we digged into OTE, right? So now this is how you read price with proper logic. Do you understand? You are not trading blindly with patterns, right? So now when we took out the low of Friday, now what are you looking for? Listen and listen carefully. What are you looking for? Let me remove all this so you listen. Just for the fact that price closed beneath this and this doesn't mean it's a high probability order block. Now, am I saying you can't be wrong? No, you can't be wrong. But your attention should be on bullish reactions. Why? Because the higher time frame is bullish. And you are inside a bullish fair value gap. Anticipate this bullish fair value gap to send price higher. The bullish fair value gap is a higher probability of sending price higher than this very order block to send price lower. You weigh your probabilities. Now, if price should close above Friday low, that signals more action to go take these equal highs right here tomorrow. I hope this is making sense. So the moment we close, Friday, we close back into the range of Friday. Today, it signals higher for me. This network is just, it signals higher prices for me. Understand? So now, looking into it from the lens of the Monday range, right? Excuse me, guys. So, um, I'm back. So, looking at it from the lens of the Monday range, now you're marking out Monday high and you're marking out Monday's low right here. When you mark it out, you zoom in. You want to see every single detail you could find. This is how you start your analysis. Look at that. We took it out by a bit. That's the Monday low, right? It was taken out by some kind of hair right there. Now, for those trading Euro USD, now you go and check if Euro USD took Monday's high. If it didn't, that's SMT divergence. I don't know whether it's there, but probably it should be there when you create a high of the week or low of the week. Random, right? And the funniest thing is that I haven't actually looked at Euro USD or DXY the whole of today. This is the first time I'm looking at it. How did I know that SMT is going to be there? It's literally there in every single reversals. It's literally there. You just have to train your eyes to see it. And then with time, experience is going to tell you, okay, it's going to be there. But never assume it's there. Always check, double check, and be sure. You understand? So, DXY, we took that low. Euro USD didn't. That's SMT divergence. Now we go down to the 12 hours. Let's see what we can get from the Monday range. I'm still having a poor network today, but regardless, I'm going to move on with this class. There's nothing stopping me, man. So we took out that Monday low. I like the rejection right there, but I don't like this. So my anticipation maybe tomorrow is that they're going to go for one more time, one more dig to the downside, and then close back, and then we continue higher. That's my anticipation for tomorrow. I don't trade this, but if I was to trade this is what I'm going to anticipate. They're going to give us one more dig to this downside before going higher. If they don't get to this low, look out for Euro USD to go for its Tuesday high and probably create the high of the week with Wednesday high. And then this Tuesday low on DXY stays intact. So how could you have participated in this? Now you go down to your 5 minutes charts or 15 minutes. I use the 5 minutes actually. So here's the 5 minutes chart. This to wrap it up. Then you can go and study. I wanted to say something. A lot of you, a whole lot of you. You don't do your assignments, but you expect yourself to be good. Or expect yourself to be better. It doesn't work that way, man. It doesn't. You can't cheat nature. You can't cheat yourself. The success you're looking for is inside the works the success you're looking for is inside the works you are avoiding. You can't cheat yourself, man. You can't cheat nature. You have to do your assignments. That's the only way you correct your mistakes. I wouldn't force anyone to do that. That's my um June is already coming to an end, but that's not the end of our journey though. Oh. Although I tend to, close down the group later on in order to give me space because there are a lot of there are a lot of chats I'm attending to on the school Telegram thing. So or very still I'm just gonna move the private students to the Discord so it can give me space to always attend to you guys. But then if you really want to get good at this, it's not gonna take you it's not something you can just do in a tickle of an eye and overnight. You have to put in the work, you understand? A lot of you just want me to put in the work for you. You're fucking lazy. Let me tell you the truth. The more I put in the work, the better I become, not the better you become. Just listen to me. Why I am teaching you, I'm becoming better at price action. That's the truth. The more I teach you, the more my experience widens. If you don't know it now. So don't really think, okay, I'm doing the hard work for you. No, the hard work is still on your own side. I can only teach you and do your due diligence to just study. Well, the moment we took that Monday low and Euro US didn't, you're looking for a close above this candle. And the moment you close above that candle, you're entering right there. You're entering right there. And you're putting your stop loss to the low that swept the low, which is the low that swept liquidity. That would be your stop loss. I would say your target should be the Monday high, but then if you're an intraday trader, you can actually just go for 5 hours. That should be enough. Just go for this Asian high. I think that's the Asian high. Yeah, that's the Asian high. So you can just go for the Asian high and you'll be done for the day.
Can I ask something?
So that could have been your trade for the day. Just sweep off Monday low. Here's the logic. We swept Monday low into a day fair value gap. We are bullish on the weekly. I'm looking for buys going into the week. We swept Monday low. We had a change in state of delivery. That's my entry. There was liquidity resting above Asian high. That's my target intraday. It's simple. Or you take the range of Monday and you take the range of Monday and when you take the range of Monday, you mark the consequent encroachment, which is the 50% of its range, and then you target that. Still the same logic. It's very, very simple, folks. Just keep it simple. You don't need to complicate your trading. Keep it simple. You understand? So that's the logic right there. And that's the way we want to 12 hour. So go study this one. There's still other ways you could have entered. Maybe like this fair value gap right here. And So that's the logic. You could have also entered through this fair value gap right here. The stop loss goes right at this low right here. This is where your stop loss goes to. You could also have entered the moment we close above this. You could have also entered with this order block right here. Yes, you can. And your stop loss goes right below this low because it actually swept sometime in that short-term low here. And then you can put your stop loss right here, and then you're still targeting that 50% right there. And that one could have given you something like a 1 to 3 hour, I think. A stop loss right here, and your TP up there. So this one could have also given you a 1 to 3 hour. So that's it. But as usual, I always tell you guys to practice one form of entry. And you guys have all that on the YouTube channel, and you also have it in the group for the mentorship. Sorry, for the guidance. So this is the price review for today. I advise you to go into the chart and do exactly the same, and probably you might gain some experience and discover some certain things I didn't say, and you're gonna discover it on your own, and then you might add that to your journal, and it's gonna improve your experience. So I hope you guys found this one insightful. Okay, do anyone have a question, please? Do anyone have a question?
Yes, I've got a question.
What's the question?
The question is why that candle high, which becomes our sort of order block, the one at the low, after on the 5-minute chart when you said after the candle, the big candle, the green candle closes above that candle, then you can take that as an order block.
You mean this one or this one?
Yes, that one, the one that you use, saying that when the candle closes above it, then we can enter that one.
Because that's the candle that led to stabbing out this liquidity.
Okay, can you kindly zoom in? Because maybe I can't see it clear.
Yeah, you good?
Okay, is it the last candle?
I used the last
Yes.
three candles. Yeah, the last three candles.
Oh
That's what I
yes,
used.
the last three candles. Yes, I just wanted to find out
Yes.
why the last three.
Yeah, because that last three consecutive candles took out the liquidity. And the last three consecutive candle, I think, is just one candle on the 15 minutes chart. Do you understand? Do you understand? Are you there?
Yes, it makes sense. I understand.
Uh-huh. So it's literally just me picking one candle on the 15 minutes. It's just because I'm using the 5 minutes, and then that's why I chose the last three candles. Do you understand? But as well, if I am very, very confident with the SMT that I saw on the Euro USD, I can also take it here, but that's a whole advanced stuff. But the best way of entering this is the last three candles. The moment you close above it, that's your entry. I hope that answered your question.
It did.
Okay. Any other question, guys? Any other person? Any other person?
Uh,
Yeah, go on.
so what about when price comes down into like an order block? You probably answered this before, but is that when you really look? Okay, so first you get your bias. Let's just say, okay, we're bullish. You're pretty much just waiting for the market to come back into, let's just say, like a fair value gap and or an order block, and that's when you really look for um a low to be broken or like a candle, towards CTO.
Yeah, go on with your question.
No, I was just saying as far as like entries, like when you're bullish and you're waiting to enter the market, uh, do you just mark out your key levels? Just say, I know here, this example that you just used is when price, I guess, broke the daily low, and then you went
Yeah.
down to the 5 minute, right? But
Yeah.
if that's on, what happens when you're just marking up the chart? Let's just say you said you did a daily, what about like 4 hour? Do you mark up imbalances on the 4 hour or order blocks on the 4 hour and stuff like that? Or, like how do you do that on lower time frames?
Okay. First thing first, I understand. Like, I've created a very simple system. I've created a very simple system that makes me understand that when I'm bullish, bearish, PDRs are gonna fail, and when I'm bearish, bullish PDRs are gonna fail. So I don't mark all the PDRs on the higher time frame or something like that. What I do is this: just the way I've gotten my direction on the daily charts, I'm sticking to that. You understand? So now, asking, okay, how do I enter? Do I mark the fair value gaps on the chart or wherever? I do that for targets. Do you understand? I can literally just mark this fair value gap right here. I'm using that as a target, meaning at the moment price enters here, I take a partial. Do you understand?
Okay, understood.
Yeah, but my overall target still remains this high from the whole daily analysis that I did. Do you understand?
Got you.
I hope that I answered your question.
No, yes, it did. Because I think I've been doing
Huh?
that, just trying to find it. Find the daily bias, but I'll still go to like, let's just say the 4 hour or 1 hour and things like that. And I'll be marking off PD arrays. And I'm just like, I guess
Um,
sometimes I'll confuse myself or, we're trying to find an
the
entry.
thing there, yeah, the thing there is this: you should understand your way of entering. You understand? And I've always said it. You don't have to use all the PDRs on it. The moment you took that low, which is the Monday low, you go into your 5 minutes and you're looking for a bullish entry, which is maybe a change in state of delivery, and you're using the order block to enter. It's very simple. So it's more like a higher time frame analysis, a lower time frame entry way of trading. And you should stop marking every single PDRA and then looking for reaction or something like that, because it's gonna make you sometimes, when you're seeing a retracement reaction inside an opposing PDRA, you quit your bias and then you try to short when you were long, and then you get yourself bonds, and then you notice that you lose the profit you actually made being long. I know something like that has happened to you before. I can tell.
Yes.
Okay. Yeah. So it's more like you have to take away the noise and have a clarity of what you're looking for. And right now, what you're looking for is a bullish market on the dollar. So since you're looking for a bullish market on the dollar, perhaps the reason why I said you have no business with this bearish order block on the daily chart. Do you understand?
Yeah, got you. Understood.
Yeah. Yeah, because if you actually mark the bearish order block on the daily chart, you're gonna be confused with this move down here and feel like, okay, I think we've changed the trend. But probably this might be a retracement. And when you go into short, then we start going up, then you get bonds, and then you start regretting. And then you might think, oh, trading is scam. Yeah. So it's more like that. You take away the distraction, you have a clear mindset, a clear direction, and stick to that direction until your invalidation is taken. Do you understand?
Oh, yes. I understand.
Good, good, good. Any other question, folks? Any other
Yes,
question?
I have another question.
Can you speak louder? I'm not using my headset.
I've got another question as well.
Okay, what's the question?
Yeah, this is with regards to the timing aspect of things.
Can you
I'm not
speak louder? I'm not hearing you.
Can you hear me? I'm speaking very loud. Can you hear me?
It's just I'm not using my headset. Do you understand? So you will need to speak louder. Go close to your microphone and speak louder for me to hear you.
Yeah, I'm speaking very loud. It's on my microphone's on my mouth. But I wanted to ask with the aspect
Okay,
of
go ahead. Go ahead. Go ahead. I'll
with the
try and
aspect
squeeze my
of
ear. Yes?
this law was created at 1:30. I think 1:30. Is 1:30 because usually I know that we should be taking, so 1:30 is the London session. We can take that law as a proper buy at 1.
Are you talking about this dollar pair?
Yes, that same dollar pair, yes. The DXY, yes.
Okay, you said 130. What happened?
I'm saying that the law occurred at 1:30. Can we take it as a high probability buy at 1:30?
Okay, because of the time of the day.
Yes, time of day, yes.
Huh?
Yes.
Okay, okay. Yes, you can.
Okay.
If see, look at me. Listen. If you understand the narrative of price, um, from 1 a.m. you can look out for something in price. But if you don't, let me just show you the reason why they say 3 a.m. to 5 a.m. Even if you had waited for 3 a.m. to 5 a.m., which is the normal kill zone that ICT told us. Although some was 2 a.m. I think it's 2 a.m. though. So now, even if you are using this, you notice that you could have actually also gotten an entry here within this cycle, right? So if you haven't mastered, trading outside the cycle, you can still stick to that. This was also an entry inside the cycle of that time. Do you understand?
Yes, I
Is
understand.
it
I
clear?
probably would have taken a loss if I wait. I would have taken a loss if I waited for that because price. I would have seen that price has taken the Asian high into the bearish order block. Then I would have probably sold. But since you said that if we're bullish, we must ignore the bearish order blocks if we're bullish on a higher time
Exactly.
frame.
Exactly. Exactly. You shouldn't be a pattern trader. You should be trading with logic. Only pattern traders, only pattern traders trade. What will I say? Oh, that's a bearish order block. You trade it. No, you are trading a bearish order block with respect to a bearish order flow. So I'm so happy you actually answered your question. So now you know the reason why you took a loss. You took
Yeah.
a loss because you were trading blindly. You were trading a bearish order block just because we had a bearish break of market structure. Perhaps the reason I taught you all the fake break of market structure. Do you understand?
Yeah. Makes sense.
Yeah. So yeah, that's it. That's your mistake. Any other question, guys?
I have one.
Any other
Uh,
any other
can
question?
I? Can I?
Yeah, sure. You can.
Actually, I got a question about the invalidation of the bias of bullish dollar. Is it just closing below the Thursday's low, or another thing? And I also heard that you said you wanna another dig into the low. I think Tuesday low, you said. then the price shoots higher. Can you explain that more?
Why I would love a dig low is to make these people who believe that this bearish order block will send price lower to feel comfortable. And also, I don't like this dig. I like when it's jagged, you understand? Not clean. This doesn't look like a proper sweep. It looks like there's still some liquidity down there. Now, I'm not saying that price must go here. From what I'm seeing on the 4-hour chart, we might as well just come close to it and create an SMT with Euro USD. Meaning Euro USD is going to take its high and DXY is not going to take its low. That's what I mean by SMT. So the reason why I would love them to dig again is because it is too clean. It is too clean. But perhaps why I should have my invalidation here is very simple. It swept out this liquidity and that makes it a strong low. A high that sweeps out liquidity is a strong high too. So this swept out liquidity and we close back into the range, and that's my string low. That's my invalidation right here for anything bullish DXY. So as long as we are closing above this low, I'm still bullish on DXY. Do you understand?
Yes, sir.
Now, another thing you guys should also understand and admit and embrace is the fact that you're going to take losses some days. I noticed that a lot of you just want to avoid losses. It's not really you don't know how to trade or how to read price. You just want to avoid losses. I'm so sorry to say to you, you can't. Stop asking me dumb questions. Face reality, man. Go solve problems. You understand? You stop finding a shortcut, a way that you can. There's no shortcut in this. You're always gonna have losing trades, and it's part of doing business. It's not bad. So, you guys should dig deep into this video. I'm gonna post the recording later on. I hope you all found this one insightful. Till we meet again, you all should be safe. Good luck and good practice.